This week, September the 1st till September the 5th, we saw markets shake up by weak economic data, Fed drama, big earnings surprises by Broadcom, Lululemon, and more, and of course, global political risk. And at the end of it all, I'm going to tell you about my trades, what I sold, and how I performed this week. Ladies and gentlemen, welcome to the weekly recap of Wealth Done with me, Noble PM. Let's get started with the video with the very first subject, which is the week closed out with a shocker. Almost a shocker. The US economic data added just 22,000 jobs in August, far below the expectations, that is. Now, that's a massive slowdown in the investors' react, and the investors are reacting accordingly. Also, the bond investors reacted to this news, tumbling to the lower levels since 2022, as traders bet on the Fed that they will have no choice but to cut rates aggressively in the upcoming months. Now, the stock markets did slip on Friday, with the S&P down here roughly 0.3%. Also, the Dow Jones had a bit of a drop of 0.5%. And the Nasdaq, well, it did drop down, but kind of remained unmoved here, ending in the green with 0.03%. And its move was basically flat. But the stock markets did slip on Friday. If we go back here to the S&P 500, and we see that it did touch on the technical levels the 20-day moving average. Now, it does hold here, but let's see what next week will bring us for the markets, because if this does not hold, then the next level will be the 50-day moving average. So despite the Friday's dips, both the S&P and the Nasdaq here hold bravely their position, and clearly the weak jobs report has markets revisiting the economic outlook. Now, the next subject is the Fed's independence, because the jobs report wasn't the only source of uncertainty. President Trump fired the Fed Governor Lisa Cook this week, raising serious questions about the Fed's independence. Now, you know how we investors are. We like certainty, and investors hate political interference in the monetary policy. And this move just added fuel to the already big fire, especially with the slowing economy and upcoming policy decisions. For traders like us and you, it's another reminder that September could be highly volatile. So let's go to the big movers. First of all, Broadcom. Broadcom reported their earnings this week on the 4th of September. As you can see here, they just devastated earnings. Now, on the comparative side, there's actually two stories. First, Broadcom surged 10%. It gave it a bit back on Friday's session then, but the entire market did give most of its gains back. It did jump over 10% even in the after hours, and then in the trading day, and then when the markets opened on Friday, it gave the half, let's just say half of it back. It did hit new all-time highs, all-time highs. We take here, look at the diagram, new all-time highs right here for Broadcom, demonstrating that the chipmaker landed a massive new customer and how this impacts. And that customer is reportedly OpenAI. And the demand of AI chips continues to explode. Now, I already did an in-depth video with what everything here means and what my expectations are on Broadcom, so check that one out. I'm going to leave a link in the video description, or just check it out on my channel. Now, on the flip side, Lululemon also reported earnings, and they tanked massively. It was nearly a 90% drop for Lululemon after they reported their earnings, after sharing its guidance, which was just devastating. The company cited tariff headwinds and weak store traffic, a double hit that just spooked investors. This was one of the worst single weeks for the brand yet. Now, I did hold Lululemon, but right back here, went up in 2024, went up with it. Actually, I bought it somewhere here, if I can remember correctly. Went down with it, went up with it a bit. Then I sold it. I saw this massive move after that. Kind of regret it, but I didn't get back into the stock. The reason is, and I'm not going to do a special video on Lululemon, but the reason for this is that the story just ain't there anymore. And if you take a look in the surge of Lululemon here, it was just a pandemic surge. So I don't think this is going to continue, because the story is just missing. Although Lululemon had its big run, it's yet to be seen if they do have that Nike story-driven material behind them, and if they can move people to buy and wear Lululemon throughout their advertising. I am not a fashion fan, so I'm just not going to mess with the stock right here. Okay, if I see a possibility that I will jump into it, I'm going to announce it on the channel. But currently, I will just let them work things out. And if Lululemon's story turns around, then you're going to see it probably. If you're starting here, if you are started here, just take a look at this massive gains. So there's no hurry. There are a lot of stocks out there, plenty of stocks to invest in. Okay, let's move on to some earnings highlights, and we're going to go here with Docusign, because this little fellow jumped after beating earnings. Just take a look here, 8.66% beat on earnings and also 2.63% beat on revenue. Massive jump here for Docusign, and they did raise their guidance. So let's just take a look here at Docudesign's financials. If we take here a look at the annual, they are showing us clear increase in the revenue in the upcoming years. Also, if we take here a look in there was the earnings per share, and also their revenue. So this could be a good opportunity to jump into DocuWare, because they also had just a little bit pullback here on the Friday session, and they just touched here the 100-day moving average. So if this holds, it could be a good possibility for a swing trade, because the company is leading hard in the AI future, which is helping to keep customers engaged in investors' interest. Meanwhile, Nvidia, on the other hand, slipped once more, passing the 50-day moving average, having its 100-day moving average down here. And let's just do a bit of an analysis. So let's see, where do we have resistance levels or support levels? Because we're looking now for support. So this was a major support, and we have two moving averages, one sitting above the support. So if it passes this, the 100-day moving average, that it could get into this range where it was its previous all-time highs in November. So let's say that it's going to surpass the 100-day moving average and go into this zone. I would say that this is a perfect buying opportunity, because the Nvidia story is far, far from over. Also on the RSI side, we can see that Nvidia is not yet oversold, but if it comes down here, it's already in this oversold zone, so I wouldn't mind adding shares to Nvidia. But remember, everything that I say here is not investment, and my investment advice is just my personal thoughts. At the end of the day, you have to make up your own mind and do your own analysis. Okay, so let's just keep reminding ourselves. This is a volatility chart of all times from 1990s till now 2025 of volatility. And if we go here through the spikes, excepting that now April, we can see that most of them happen in September, or actually September, October. Also here in 2020, well, 22, well, this was the pandemic, but any other spike is mostly September again, also October, but it's September, end of October, somewhere there. So let's just keep our calms, because September is historically a volatile month. It can also go into October, even November. But if both of them have volatility in there, September and October, you can probably see November, where also earnings start once more, earnings reports start once more, that the stock market does rebound, and we're going to have a nice Santa Claus rally. Okay, so that's it for the recap. So we just talked about weak jobs report drove bonds a bit higher and the stocks lower on Friday. Fed independence is under question after Trump's move. Broadcom rallied, Lululemon crashed, and Docusign impressed. Global risk remains front and center as we move deeper into September, but keep calm. And now let's move on to my trades for the week. So first thing first, these are trades and also income. The first income that I generated is from interest rate on my cash deposits, so interest, and I'm getting 2% currently. So not that good, not that bad, but hey, better than nothing. And this was on the 1st, so right on Monday, receiving here 24.01 euros. After that, I did also on the 1st a small trade on Rheinmetall, again the German defense company. I'm in and out of this trade. I wish I'd held it for just a couple of days longer, but realizing only 12.5 euros on it, I'm still happy with that small trade. Did another trade on Open Door, ticker symbol open, on the 2nd, that's on Tuesday, and made a small 33.88 euros there. That's gross, and it netted to $29. And just a couple of seconds here on open. Now they said that this is going to be a $10 stock. And I'm actually considering, okay, because it's massively overbought right now, a move back, if there's a possibility, actually adding a small amount. Something that I could maybe lose forever. A small amount to this, because remember, it could go back. It's currently at $6.65, and it went from 0, so from 5 cents. So 50 cents. So that's if this goes back to 50 cents, then you're done. That's never going to go back where, just check this out. February the 21st, where was this peak? 11th of February 2021. Open door sitting at $39, and now it's at 6, and it was at 50 cents. So $39, 50 cents. Keep this in mind if you want to trade this stock. Just keep this in mind where it could head. Because there's nothing. There's no fundamentals. This is just speculation. But hey, you can also speculate if you want. So that's it for open. Next, I sadly completely sold my shares in Alphabet. That's the A-class shares, so ticker symbol GOOGL. On the 3rd of September, I'm just going to take a look at the chart quickly. So I made 100, no, that's the reduce, so 42 euros added down here. And let's take a look at Alphabet. Ticker symbol GOOGL. Google is currently massively overbought. Even if I do here, let's just do here a Fibonacci. Let's do a Fibonacci extension. So we need to take the lows, highs, lows once more. So we're currently sitting at 1.61 Fibonacci extension. If you think that this is going to go to 2.61 Fibonacci extensions without a correction, well, good luck to you. I see here a possible massive correction in Google, which would be a extremely nice possibility to add back to the stock. The stock has performed after its massive crash in the 2000 from February till, well, pretty much the change course. It was clear that it's going to change course in May. That is where I added even more to my shares, because I bought them pretty on the expensive side. Let's take this out, reset the scale here. So if you're a Google holder, congrats. I would suggest, this is not financial advice, maybe take some profits, because life goes on, and if there's a possibility to add back somewhere here to Google, then you can do it. But right now, I would take some profits. That's what I did. Not only did I took profits, I completely sold out of my stock because, well, as I said in my previous analysis, and I can also see here pretty good resistance level. As I said in my previous analysis, it could be the best stock in the world. If you bought it far too expensive, that you're just not going to make money. And holding it forever and ever, never sold the stock, as Charlie Munger said, that's not my style of investing. Okay, they also did not invest in stock per se, also in stock, but they invested in companies where they can move around stuff. And another philosophy of them, never invest in something that doesn't pay you. Google does not pay you that well. They're paying you 0.35% per year dividend. So that's nothing. Okay, that's just nothing. Okay, moving on. I made a nice little trade here on Tesla. I'm proud of this trade. I was even thinking about Tesla on Friday, but I said, nah, let's just leave Tesla where it is currently. So 58.6 euros gains, and that grosses to, where do we have it, $50 gross profit, so that's after taxes, on end of the year trade for Tesla. Now, two more trades. One of them is HIMS and hers, ticker symbol HIMS, also on the 3rd of September, and made here 18.04. And last but not least, I sold my gold ETF, so gold ETF, and the ticker symbol is PPFP. This was on the 4th of September, made here a nice little 19.06 profit. And let's just take a look at gold. So gold, let's take a look at this little fella. Currently massively overbought, but it broke out of this range. Now, if this has a retest, if gold has a retest here, I would say that's a possibility. That's a good possibility. Let's just take a look at this range right here. Let's draw this little fellow right here. You know what? Actually, let's open up gold right here and let's just take a look at where are the moving averages. So we have the 20-day moving average, the 50-day, the 100-day, and the 200-day moving average. It will indicate that if gold comes back down here, hits the 20-day and holds, it's going to be a massive opportunity. No guarantees, but it already surpassed a 61 Fibonacci extension. So the 100 extension is next one, and after that, I don't know, uncharted territory. Everything can happen. But this also means that the Federal Reserve cuts rates and gold rallies. We're heading probably, I don't know when, we're heading for a recession. Okay, so I'm going to leave you now on this negative note. My name is Noah BM. This was Wealth Dumb. Subscribe, like, and catch you next time. Stay safe out there. Bye.